Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today we're diving into Global Medical REIT's latest report. Prepare for a tale of real estate, healthcare, and a financial balancing act. This is an 8K filing, which means something important happened that the company needs to tell investors about right away. The date on this report is February 27, 2025, so this is pretty fresh information. Global Medical REIT is a company that invests in properties that are used for healthcare. They own medical office buildings, hospitals, and other facilities. The company's name is Global Medical REIT Inc. REIT stands for Real Estate Investment Trust, meaning they own and manage properties and distribute the income to shareholders. They're based in Bethesda, Maryland. This section is about whether this filing needs to cover other obligations, but we don't see anything checked here, so nothing special in that regard. They have common stock and preferred stock trading on the New York Stock Exchange. The ticker symbol for their common stock is GMRE, and for their preferred stock, it's GMREPRA. The important thing to know is that they're publicly traded, so anyone can buy and sell their shares. Now we get to the important stuff, the financial results. On February 27, 2025, Global Medical REIT announced how they did financially as of December 31, 2024, both for the last 3 months of the year and for the entire year. They put out an earnings release and a supplemental report, both are on their website. These exhibits 99.1 and 99.2 contain the earnings release and supplemental information that we're going to talk about. This information is being furnished, not technically filed, which has certain legal implications, but the bottom line is they are making this information public. So let's dive into the earnings release. It looks like a lot of information is packed in here. Let's look at the highlights. It seems that the core business of renting medical properties is generating revenue. The filing mentions funds from operations, or FFO. It is a term that is used by real estate companies. It is a way of measuring how well the real estate portfolio is performing. For the last 3 months of 2024, the FFO was about $0.24 per share. For the entire year, it was about $0.98 per share. This is something investors pay close attention to. Is it growing? Is it stable? Is it declining? In this case, it appears stable. The revenues, that is the money coming in from rent, increased by 5.5% to $86.6 million for the last 3 months, compared to the same time in the previous year. For the whole year, revenues increased by 8.5% to $333.6 million. This shows the company is growing its rental income, which is very good. Now let's talk about net income. This is the money left over after all the bills are paid. The company had a net loss, meaning they spent more money than they earned. The net loss was about $1.8 million, or $0.02 per share. For the year, net loss was $10.2 million, or $0.11 per share. This is not something investors like to see. The company makes mention of same property cash net operating income, or NOI. What this refers to is how the income from properties they have owned for at least a year is changing. If they just bought a new property and it is generating income, that would not be reflected here. They are trying to show how properties they have owned are performing. The same property cash NOI increased by 2.5%. This means they are making slightly more from the same properties, possibly due to rent increases or better management. The company has 174 properties and about 4.4 million leasable square feet. That means they have a lot of space to rent out. 97.6% of their properties were leased, which is a very high percentage. That means almost all of their properties are occupied by tenants who are paying rent. Also, the weighted average remaining lease term is 6.7 years. This means that tenants are locked in for the long term, so Global Medical REIT has predictable income. Now let's look at the balance sheet. This is a snapshot of what the company owns and what it owes. The company has $1.3 billion in gross real estate investments. This is the value of all the properties they own. They have $732.5 million in total debt. This is the amount of money the company owes to banks and other lenders. Debt is something to watch, especially with rising interest rates. That's the end of the key details. So what's the story here? Global Medical REIT is growing its revenue and has high occupancy rates. The company is making a lot of money from rental income, but they are spending a lot as well, leading to net losses rather than profit. It has a lot of debt which might become more expensive to service if interest rates keep rising. However, long-term leases provide stability. From my point of view, it is a mixed bag. The company is getting bigger, but they are not yet profitable. The high occupancy is great, but the debt is a risk. If I were considering investing, I would want to understand how they plan to become profitable and manage their debt. Thanks for watching. If you found this corporate decoder breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings.